Hey everybody, Economic Ninja here. Have you ever heard of the term be fearful when people are greedy, but be greedy when people are fearful? I don't even know if I got that correct. I might have had it switched around. Wait, strike that, reverse it. The point is, we hear that all the time, but honestly, very few people understand what that means. And why do I say that? It's because very few people actually live that. That is true. Investors are few and far between, but speculators abound. And in this market especially, we have some awesome opportunities to pick up value when other people are freaking out. And let's just put it this way, algorithms are just taking over the world sometimes. So we've got to use those to our potential or our advantage, right? So we can use it to its full potential. So I'm going to talk about that, and we're going to dive into a couple things and give an example. And so without further ado, let's do this. All right, everybody, so here we go. We're going to talk about this market downturn that we've seen. We just came off of 8 weeks of down stock market numbers. I mean, quite frankly, we have seen some pretty impressive events. And I've talked about this before, you know, the 6 months or 1 year, but really 6 months leading up to the Lehman Brothers collapse. And we are all getting ready for an event similar to that. But in my opinion, not financial advice, none of this is financial advice or trading advice, is going to be worse, right? Well, before that happened, you know, the stock market started to turn down. It was headed lower and lower and lower. There's certain things were inflating, like fuel prices back then, nowhere like what we're seeing today. Also, company earnings were lagging. People were starting to contract their spending because interest rates were going up, mortgage rates were going up, housing was going up, all of that stuff before Lehman Brothers crashed, and all of the doom and gloom about the mortgage-backed securities were starting to come out, but yet we still hadn't seen the brute force of when all the retailers were leaving. Well, in that amount of time, certain things started selling off. It's a matter of lots of things. We saw the stock market trending down. We also saw paper, gold, and silver trending down. Now, what's really interesting about that, and what's something that's different today than back then, is as it was trending down slowly, there was plenty of supply of physical precious metals around. So what you saw was the paper shares come down, and you saw mining shares also coming down accordingly. But it wasn't until November of 2008, after Lehman Brothers had crashed, the stock market was horrible, that gold and silver found their bottom. And then they literally went on a multi-year tirade. Even after that happened and gold and silver were starting to trend up because people started figuring out, oh my gosh, what is going on? The Federal Reserve's printing all this money because they came out with QE. That's when gold and silver took off. Now we're seeing something even, well, here, let me stop real quick there. When stocks were still finding their bottom, and they took quite some time to find their bottom, gold and silver took off, the mining shares exploded. Now, I've talked about mining shares before on this channel, and I want to bring it up now because somebody, a subscriber, reached out to me and they talked about a company that I was actually invested in. And they said, yeah, I own this company, and you know, it came down like 30–40%. And this is going to get us to who I want to talk about. I'm going to actually use an example of a company that I covered, Gold Mining Inc. Okay. Now, Gold Mining Inc. I covered a few months ago, and this is the exact same scenario as what I was talking about. Now, this other company, won't name it, is a company that I owned, and it fell 40% since I purchased it. And he said, yeah, I was really excited about it, but then I sold it. And I go, why'd you sell it? He said, well, it went down in price. And he goes, do you still own it? And I said, well, not only do I own it, I literally doubled my position in the company. And he said, why? And I said, well, what did the company do wrong? And he said, well, nothing. It's going down. I said, yeah, exactly. You bought it one day because of the fundamentals, what the company was doing. But then it trends down and you go, I'm scared and I sold. I said, well, I doubled up. That is what legendary investors do. They don't sit there and buy one day and then all of a sudden a narrative comes out, which is ironic because there's no narrative against the price of gold and silver or other precious metals right now. As a matter of fact, there's never been a better opportunity to buy, right? Because you have, in the sight of inflation right now, you're literally seeing certain things sell off because hedge funds and algorithms are selling it off because they're trying to raise money because they're freaking out over margin calls. This is like the opportunity, in my opinion, of a lifetime. But the problem is most people are not investors, they're speculators, right? So they do the opposite. Warren Buffett always buys on weakness. As a matter of fact, he's usually the trendsetter. Now, after the Great Recession, people started finally figuring it out like, oh wow, now there was a day where people literally mocked Warren Buffett for buying the railroads. Why? Because railroads were going down. The stocks were cratering because freight had started to fall off a cliff. Freight, the shipping index, in 2006, 2007, 2008, you know, these things were slowing down rapidly, just like we're seeing today. And so he was buying them up because he saw the value, because he goes, no, it's going to turn around. I'm buying things for pennies on the dollar. So let's get to the subject matter for today, and that's Gold Mining Inc. This is a company that I covered. Was started by an amazing guy that started two huge uranium companies, and we're going to use this as an example of what I'm doing and what I'm thinking about in the market, okay? So without further ado, let's get some notes. The pizza box. All right, guys, so here we go. So let's cover this. Now, again, this is the sponsor for today's video, and I want to thank Gold Mining Inc. But I love this example, okay? Because Gold Mining Inc. was started by Amir Anani, and he's a value investor as well. He started picking up gold assets the last time gold and silver started tanking back in 2011. Now, remember, I talked about when gold and silver found their bottom in 2008, and they went on a multi-year tirade, right? Because the Federal Reserve was doing QE1, 2, 3, Operation Twist. They started naming all kinds of crazy things. I don't even know all the names. And so people started picking up gold and silver assets like mining companies, exploration companies, because they saw value in it, because they were afraid of the dollar falling in value, right? It's not until just recently that now those fears are really becoming a reality, because we're starting to see countries walk away from the dollar. They're not using the dollar. They don't want the dollar. They're actually getting rid of their dollar. So we're seeing inflation coming home to roost in America, right? A lot of these dollars are not needed anymore for trade settlement, because they've just decided, no, we don't need it. So they're buying assets in America, which is sad to say, but it is true. We've never seen, in my non-professional opinion, in the last century, a time where dollars are becoming more and more worthless, all right? And also with a backdrop to all the other currencies becoming worthless. So there's this weird psychology that's messing with investors as they see the DXY and they go, oh, the dollar's strong. Like, no, the dollar's only strong against all the other crap currencies that are falling in value. Okay, so that's a very interesting dynamic here. And the day that this switches, it's going to switch fast. So Amir Anani started two uranium companies, right? He started UEC and UROY. Now, those were huge. They made massive returns for shareholders, right? But Gold Mining Inc. was started and he started picking up properties value plays when nobody wanted it. You know, companies that had started projects in the boom, and then they ran out of money when gold and silver fell in, like, you know, the 2011, 2012 era, and they started needing money, so they couldn't maintain operations, so they would sell to whoever they could sell to. And he was going up and grabbing all these properties, right? Knowing that there would be a day where gold and silver would start to pick up. Well, now we've seen that happen. Gold and silver have started to pick up again because of the inflation narrative. Now, you may think that it's not happening fast enough, but if you go back to the mid 70s and the late 70s, you'll see that it's a psychological deal. People go, inflation's high, and then after a while, when it gets really bad and people are running for the exits, then they look to a hedge against inflation, and that's when the prices of precious metals spike, right? Have we gotten there, in my opinion? Absolutely not. Is there a ton more room to go? Yes, there is. Do I know when that's going to happen? Nope, sorry. I just don't. But the point is that I don't think that when I go and purchase my precious metals or invest in the resource sector, because I'm like, the day it happens, I don't want to be late. I'd rather be early, and I'm buying on weakness. I'm not buying into strength. I'm buying on weakness. That's what I do, because I believe in the story of the fundamentals. So I'm looking for deals. So Admir is no different, right? Okay, so now when I did this video, this is what I want to point out. This company, and I'm going to throw up the ticker, was, if we haven't already, I'm gonna have some fancy editing on this bad boy. The ticker is GLDG, and I want to make sure you guys know that this is a New York listed. It's a list on the NYSE, so this isn't an OTC stock, right? Okay, so even right there, Admir is going for the big institutional investors. They want liquidity. It's right there. That NYSE listing is big when you're dealing with a resource company. So I did the video around January, February, and the stock was trading in the $1.50, mid $1.50 range. And to give you an idea of where we were at, gold was trading around 1,940 bucks around that time, right? Now, today, as the recording of this is happening, gold is trading down at 1836. So on a percentage basis, it's not that much, right, of a loss in gold. But you look at the leverage. I talk about this all the time. The leverage for resource companies, both exploration, especially junior miners and major miners, compared to the price of gold itself, is immense. And so a lot of people, a lot of traders know, hey, I've got my core physical gold position, and then I've got a little bit extra money. I want to really leverage that to the price of gold and silver. So it happens on the downside and the upside, right? They get into these companies, stocks, good companies with good management teams, things like that. And again, you have to do your own due diligence on anything you invest in, right? But really, you need to watch these companies. I've talked about it before, where you take these little nibbles, right? And you watch the company. So let's talk about what they've been doing. So gold hasn't fallen on a percentage basis that much. But the stock, Gold Mining Inc., came off of its around the $1.50, $1.60 range. We're trading right now at a little over a dollar. I think as the recording of this is going on, it's like $1.06, all right? So you've seen a really good pullback on percentage basis. Well, in that amount of time, this is what they've been doing. They started drilling on their La Mina project. They acquired an existing NSR royalty on a project in Colombia that they're already a part of, but now they've acquired a royalty off of that as well, right? They've also created a new subsidiary, and they call this one US Gold Mining Inc., so as to advance its Whistler Gold copper and gold project. So now, I want people to realize these companies right now, like I was telling the subscriber, the one that I doubled up on was the reason why is because these companies are still working. They get hammered down because of a stock sell-off in the NASDAQ, the S&P 500. That's not where these are. So everybody is thinking, oh, this isn't the time to invest. Whereas the multimillionaires, the billionaires, as a matter of fact, I just got off the phone with an extremely wealthy investor in the resource sector. And he is more excited than anything because he's like, this is like, I'm running around finding deals like crazy. And it blows my mind. And what I'm excited about, and again, I've told you this before on this channel, is the most important thing to me is to be ahead of the trend, to be first, right? And then to sell into strength when everybody's freaking out. It's the same thing I did with real estate. When I was buying real estate, when people were mocking me in 2000, 2001, because they said, we just came off of a massive bull run, and now we have stock selling, and they were referring to the 1995 to 2001 run-up of real estate prices. They said, now we've got the dot-com bust, everything's going to crap in a handbasket. I mean, it's not looking good. And they were making fun of me, like, oh, you're gonna lose. And I saw the greed. I saw interest rates were coming down, and I saw an opportunity, so I started buying and buying and buying, and I was aggressively buying. But it wasn't for another year or two that we started to see profits. I was buying for a specific reason, and that was that someday that cycle was gonna revert. And quite frankly, I have never seen a better a better reason to be invested in resources. I mean, you've seen nickel squeeze, you've seen lithium go up, uranium, and what's ironic is the two monetary metals are the last of the show right now, gold and silver. So I want to position myself with a myriad of companies. I want good management teams, good projects. I want fundamentals. And then I want to diversify over, I have a basket of these companies so that when this turns, just like in 2008 to 2010, we saw 4, 5, 10 bagger stocks. And that's what I'm here for. So with that being said, let's get rid of the notes. I'm just joking. I'm going to pick that up, I swear. And let's get out of here, guys. Gold Mining Inc., I thank you so much for this opportunity to highlight your company again. And these are the days. These are the days where you sit back and, oh, one last thing. In the last video I did, so many people commented that they love this company. And so I want to thank them for sponsoring this video, but also wanted to highlight the opportunities. Not the, they're crushing it. So anyway, guys, that being said, I thank you so much for watching. The Economic Ninja is out.